Hello, everyone, and welcome back to Synaptic Investing. I hope you're having a fantastic week and are ready for another deep dive. Today, we're breaking down one of the most requested companies in the comments, Advanced Micro Devices, AMD. On the surface, it looks like a fantastic business, a real tech powerhouse. But the real question for us as long-term investors is this. Are there hidden cracks in the fortress that the market is ignoring? Or is it truly a wonderful company for the next decade or two? That's what we're here to find out.
That's a massive question. And what's truly fascinating here is just the sheer velocity of change in this industry. It's moving so incredibly fast.
Absolutely.
And AMD is right in the thick of it, right in the eye of that storm.
Yeah.
So our mission today really is to connect the dots. Look at the business, the competition, the financials, the future, and give you the bigger picture of where AMD stands right now. And importantly, what that means for its long-term potential.
That's a huge task. And before we get into the details, just a quick note for everyone watching.
Yeah.
For those who want to act on these investing ideas, having a professional-grade platform is key. We personally use Interactive Brokers, and we've actually partnered with them to get our viewers a Stark bonus when they sign up using our link.
So they get a bonus. Support the channel. Win-win. That link's in the description below, right?
That's right. It's down there. And of course, if you find value in this kind of in-depth discussion, the best way to let us know, and frankly, to make sure you get the next one, is to subscribe and like the video. It genuinely helps the channel grow. And if you have any questions about AMD as we go, please jump into the comment section. Let us know what you think.
Perfect. Okay, now let's get into it. Pillar number 1, the business model. So AMD, what exactly do they do?
Okay, yeah, let's kick off with the basics. For anyone maybe newer to the semiconductor world, how would you describe what AMD actually does? How do they make money?
Well, at its core, AMD isn't just, a chip company. They're really a global powerhouse in semiconductor design.
Design, right?
Yeah.
Not manufacturing.
Exactly. They operate on what's called a fabless business model. So think of them as the master architects, the brilliant designers of these incredibly complex microchips, the literal brains of modern electronics.
Okay.
But unlike some rivals, they don't actually own or operate the huge multi-billion-dollar factories, the fabs that physically make these chips.
Right.
Instead, they outsource that. It's incredibly capital-intensive, super specialized work. They give that to dedicated foundries, most famously Taiwan's Semiconductor Manufacturing Company, TSMC.
Who are just giants in that space.
Absolute leaders. And this choice, being fabless, it's strategic. It lets AMD pour all its resources, all its brainpower into the highest value stuff. The cutting-edge research, the innovative design, the marketing, they focus like a laser on out-innovating everyone else.
And leave the really expensive factory building to someone else.
Precisely. It's lean, potentially high margin when it works well. They handle the blueprints. TSMC handles the physical construction.
So, if they're the architects, what are these brains they're designing? What's in their product portfolio? What are they actually putting out there?
Yeah, so their portfolio, it's basically the foundational processing power for just a huge range of modern devices. Everything from, the PC you might be listening on to the massive data centers powering the internet and AI.
Okay.
First up, you've got their CPUs, central processing units. These are the general-purpose workhorses handling most of the computer's instructions. Two main brands here, Ryzen for consumers, desktops, laptops.
Ryzen's been huge for them, right?
Yeah.
Really took the fight to Intel.
Absolutely huge. A real success story in PCs. And then there's EPYC. That's their brand for the high-performance server market. These are the beasts running the internet, enterprise data centers, the huge cloud providers like Microsoft, Google, AWS.
EPYC seems critical for their future.
Oh, massively important. A huge part of their growth story is tied up in EPYC.
And then, of course, the GPUs, graphics processing units, which, they've become unbelievably important lately, especially with the whole AI explosion.
You got it. GPUs, yeah, historically it was all about gaming graphics, making things look pretty.
Right.
But they've evolved dramatically. They're incredibly powerful parallel processors now, handling vast amounts of data all at once. AMD splits these into two main families too. There's Radeon, that's for PC gaming, professional visualization, think of graphic designers, video editors, and gamers wanting high fidelity.
Okay. Radeon for gaming.
And then the one getting all the attention now, Instinct. This family is built specifically for the really demanding stuff. Yeah. Data center AI, high-performance computing, HPC, these are the accelerators needed to train and run those huge AI models, the large language models behind generative AI.
So Instinct is their answer to Nvidia in the AI space.
That's the direct competitor, yes. It's designed for those massive scientific simulations pushing research boundaries. It's a critical product line for them right now.
Beyond CPUs and DPUs, you also mentioned adaptive and embedded solutions. That sounds a bit more niche. What's that about, and how did that become part of the AMD picture?
Yeah, that's a really crucial piece of their broader strategy now, and it mostly came from that huge acquisition of Xilinx back in 2022, a multi-billion-dollar deal.
Right, I remember that. FPGAs and things.
Exactly. This segment includes technologies like field programmable gate arrays, FPGAs, adaptive SoC system on chips, plus other embedded processors. Without getting too technical, FPGAs are cool because unlike a normal CPU or GPU, you can actually reprogram them after they're manufactured.
Okay, so they're flexible.
Super flexible. Imagine hardware that can change its function depending on the job. That makes them really valuable for specialized tasks. Think automotive systems, industrial controls, aerospace, defense, even high-speed networking, 5G infrastructure.
So Xilinx opened up a lot of new markets for them.
Dramatically expanded their reach into these specialized, often high-margin embedded markets. It gave them this broad portfolio of customizable, power-efficient solutions. Really important for that growing edge computing world where you need intelligence closer to where the data is generated, not just in the cloud.
Okay, so they design all these powerful, diverse chips. Who's actually buying them? Who are AMD's main customers?
It's a pretty diverse group, which makes sense given how widespread their tech is. They sell to the big OEMs, original equipment manufacturers, Dell, HP, Lenovo, companies building the laptops and desktops you buy.
Right, the PC makers.
Then a huge and rapidly growing customer base is the hyperscale cloud providers. We mentioned them: Microsoft Azure, Google Cloud, AWS. They buy EPYC server CPUs and increasingly those Instinct AI accelerators in absolutely massive quantities to build out their infrastructure.
They must be enormous customers.
Colossal. They're literally building the backbone of the digital economy. And then a very visible group are the big game console makers. Sony for the PlayStation, Microsoft for the Xbox. They use AMD's semi-custom chips tailored specifically for those consoles.
So OEMs, hyperscalers, and console makers, a pretty broad mix.
Yeah. That breadth initially helped diversify things. But as we're about to see, that mix has been shifting dramatically.
Okay, so let's talk about that shift. You mentioned a profound transformation looking at their 2024 results. The whole revenue mix is changing.
Profound is the right word. It's a complete reshaping. They used to have 4 main reporting segments. Now it's consolidating to 3. And the numbers. Well, they tell a really dramatic story.
I definitely remember gaming being a huge pillar for them, especially with those big PlayStation and Xbox deals. What's happened there? Is it still as important?
It's funny you say pillar because it really was. It provided stability, significant revenue, but its relative importance has really shrunk. In 2024, gaming segment revenue actually fell sharply, down 58% year over year to about $2.6 billion.
Wow, 58% down.
Yeah. Now, that only accounts for about 10% of their total revenue. It's not necessarily that the segment failed. Consoles are still selling. AMD's tech is still in there. But it's more a reflection of just how explosively other parts of the business have grown.
Okay. So it's not shrinking in absolute terms necessarily, but other things are just taking off.
Exactly. Plus, you probably have some cyclical factors in console sales, and Nvidia is always putting intense pressure on the PC gaming side. So gaming's still there, but it's just not the main story anymore.
So if gaming isn't the main story, what is? Where did all that focus, all that growth shift to? What's the new engine?
That's the key question, and the answer is crystal clear. The data center segment. This is absolutely the centerpiece now. This segment includes those EPYC server CPUs and, crucially, those Instinct AI accelerators.
Okay.
The growth here has been, well, almost unbelievable. In 2024, revenue nearly doubled, grew an astonishing 94% year over year.
94%.
94%, to a record $12.6 billion. That's nearly half the entire company's revenue, now 48.8%. It's gone from a growth driver to the dominant engine. It makes more operating profit than all the other segments put together.
That's staggering. It's not just a pivot. It's like a whole new company almost.
It really is. It's a complete realignment of their strategic focus, their financial destiny. It's all about the data center now.
Okay, so data center soaring, gaming less important relatively. What about the other pieces? Client, that's PCs, right? And embedded.
Right. Client is the CPUs and integrated graphics for desktops and laptops. That actually had a nice rebound after the post-pandemic PC slump everyone went through.
Yeah, that was rough for a bit.
It was, but client hit record revenue in 2024 too, grew 52% to $7.1 billion. That's about 27% of total revenue. Mostly driven by strong demand for Ryzen, which is still very competitive, especially as AI starts creeping into PCs.
Okay, so client is healthy. What about embedded, the Xilinx stuff?
The embedded segment, yeah, primarily the Xilinx acquisition, actually faced some headwinds. Revenue there declined 33% in 2024, down to $3.6 billion. But this wasn't really a demand issue or competitive loss.
No. What was it then?
It was mostly customers working through excess inventory. They'd built up big stockpiles during all the supply chain chaos of the pandemic.
The inventory correction phenomenon.
Yeah. Exactly. It's a common cycle in semis. Most analysts expect that segment to bounce back to growth once that inventory gets absorbed. The underlying demand for that tech is still strong.
These numbers really do paint a picture of a company just completely transforming itself. You said this rapid shift concentrates both risk and opportunity. Can you unpack that a bit? What does this transformation really mean for AMD's future?
Absolutely. I mean, the speed of this change is incredible. Just look back 3 years. Data center revenue, $6 billion in 2022, now over $12.5 billion in 2024.
Wow.
Meanwhile, gaming revenue fell from $6.8 billion to $2.6 billion in that same period. It tells you the whole investment thesis for AMD has fundamentally changed.
So it's all riding on data center success now.
Pretty much. Their future is inextricably tied to cloud computing and, even more critically, AI. Now, this pivot is definitely a double-edged sword. On one hand, it puts them right in the sweet spot, positioned to grab share in the fastest-growing, most valuable tech markets on Earth.
That's the opportunity side.
That's the massive opportunity. But the risk side is that their success is now highly dependent on staying ahead in that hyper-competitive data center and AI accelerator race.
Meaning a slip-up is much more costly now.
Far more impactful. Think about it. If their next-gen AI chip, say, isn't competitive, that would be devastating today. Much worse than just a weak year in the PC market would have been 5 years ago. The stakes in R&D and execution in data center are just sky high now.
That concentration of risk definitely makes sense, especially in this industry. But you also said the core business model itself is simple, enduring, like selling picks and shovels during these digital gold rushes.
Yeah.
Why is it so durable despite all this volatility?
Yeah, it's about understanding the deep underlying megatrends. AMD's core model is simple. Design great chips, outsource the making, sell them. What makes it so strong, so durable, is that it's anchored to trends that aren't going away. In fact, they're accelerating. The global demand for computation itself is a structural shift, fundamentally reshaping everything.
Okay, so what are the biggest trends they're riding? AI is obviously number one.
Artificial intelligence is the monster wave right now. It's not just a feature, it's a paradigm shift, like the internet was. Training and running these massive AI models requires just an insane amount of specialized processing. AMD's Instinct GPUs, their EPYC CPUs, they're built for this.
And the market projections are just enormous.
Astronomical. The AI accelerator market alone, some estimates say it could go from maybe $200 billion in 2023 to $650 billion by 2028. That's a colossal tailwind. AMD is right there, making the essential tools, the picks and shovels.
Okay, AI is the big one. What else gives their model that enduring quality?
Second is cloud computing. The shift from companies running their own servers to using the cloud, that's still happening globally. It's a multi-year migration. Every company, big or small, is moving more to the cloud or expanding there.
Driving demand for server chips.
Constant, sustained demand for powerful, efficient server CPUs like EPYC. And AMD's been steadily gaining share there, which feeds that huge data center segment growth. It's not a one-time move. It's a continuous build-out and upgrade cycle as cloud usage just keeps exploding.
Makes sense. And the third trend?
Third is ubiquitous and edge computing. Think Internet of Things, IoT. Billions of devices out there at the edge. Smart cars, factory robots, drones, smart cities, medical devices.
All needing processing power locally.
Exactly. They need more sophisticated onboard processing. This creates huge new markets for those embedded and adaptive solutions, the stuff they got with Xilinx. So basically, as long as humanity wants to compute, analyze, connect, automate, AMD's business model stays incredibly relevant. Essential even. They make the fundamental building blocks.
Okay, this is where it gets really interesting for me. If the model is simple and the demand is huge, what actually protects their profits?
Yeah.
What's AMD's economic moat in this brutal, fast-moving world?
That's the critical question for any long-term investment, right? AMD's main moat isn't something obvious like a consumer brand, Nike's swoosh or Coke's logo. It's not a physical network like a railroad either. It's rooted deep in intangible assets.
Meaning their intellectual property, their designs.
Exactly. It's the collective brainpower of their world-class engineers, decades of accumulated R&D, the resulting huge portfolio of IP and chip design, CPUs, GPUs, SoCs. It's that deep specialized knowledge to create these incredibly complex, cutting-edge architectures that actually perform better.
So the mode is basically being smarter, faster, more innovative.
In essence, yes. It allows them to consistently design products that offer superior performance or better energy efficiency or just a better total cost of ownership for customers compared to rivals. It's about constantly out-innovating, pushing the technical boundaries, and turning that innovation into products people desperately need.
Can you give us a concrete example? Like, how did this moat work in practice against a giant like Intel?
Oh, the perfect example is the rise of EPYC, their server chips. For like a decade, Intel basically had a monopoly on x86 server CPUs, market share over 95% sometimes.
A total stranglehold.
It looked like an unbreakable fortress around a hugely profitable market. But AMD, leveraging their totally redesigned Zen architecture built from the ground up and this novel chiplet design.
Chiplets. What's that?
Instead of making one giant monolithic chip, which gets harder and harder as they get more complex, AMD cleverly broke it down into smaller, specialized chiplets. Think building with optimized Lego bricks instead of carving from one big block.
Ah, okay. More efficient.
Way more efficient to design and manufacture. And they connect these chiplets together. This approach was a game changer. EPYC wasn't just a bit better. It offered way more cores, demonstrably better performance on many tasks, and crucially, better total cost of ownership because it was efficient.
And the big cloud guys noticed.
They absolutely noticed. The hyperscalers, Microsoft, Google, AWS, the most sophisticated buyers on the planet, they started adopting EPYC at scale. This wasn't marketing hype or just price cuts. It was superior design, that intangible asset, translating into a better product that solved their problems more effectively. It breached Intel's fortress and changed the server landscape forever, proved AMD could execute at the highest level.
So looking at that moat today, is it getting wider, stronger, or is the competition closing in?
I'd say the story is widening, but fiercely contested. There's good evidence it's widening. Just look at their consistent execution on the Zen roadmap, generation after generation. They went from underdog to performance leader in many areas. That core design engine is clearly strong.
And they're pouring money into R&D, right? That must help widen it.
Oh, massively. That's foundational. They're actively deepening the moat with huge R&D spending. It's quadrupled in 4 years. From $1.6 billion in 2020 to over $6.4 billion in 2024.
Wow, that's a serious commitment.
It really is. Plus, those strategic acquisitions helped broaden the perimeter. Xilinx added leadership in FPGAs and adaptive computing, crucial for edge and specialized tasks. Pensando added DPUs, data processing units, which help offload networking and security in data centers.
Making their overall platform stronger.
Exactly. A more comprehensive, integrated data center solution makes them a stickier partner for big customers.
But you said fiercely contested. Where's the fight hottest? What's the biggest challenge to that moat, especially looking ahead?
Well, the contest is still intense and by 86 CPUs. Ironically, where their moat is maybe strongest, because Intel is fighting like hell to come back. But the biggest challenge, where AMD's moat is frankly still pretty new, is in that critical AI accelerator market.
Against Nvidia.
Against Nvidia. And Nvidia has an incredibly powerful moat of its own. It's not just their GPU hardware, it's their proprietary CUDA software platform.
Ah, yes, CUDA. It's everywhere in AI research, isn't it?
It's been the standard for over a decade. There's this vast, deeply entrenched ecosystem.
Yeah.
Trained developers, optimized software libraries, documentation, established workflows. It creates incredibly high switching costs.
Meaning it's hard for customers to switch away from Nvidia, even if AMD's hardware looks good.
Exactly. Imagine a big tech company having to rewrite years of code, retrain thousands of engineers, disrupt pipelines, just to switch hardware. It's a massive pain. AMD's counter is their open source ROCm platform, but they are definitely playing catch up. That ecosystem lock-in, that's arguably NVIDIA's strongest weapon right now. So AMD's fortress is expanding, yes, but the walls in that crucial AI territory, not fully secured yet. And it's as much a software battle as a hardware one.
That sounds like a never-ending race. Just constant pressure to innovate faster than the other guy. It reminds me of that concept, the Red Queen effect. Can you explain that and why it's so relevant here?
It's the perfect mental model for this industry. The Red Queen effect. Yeah,
Oh.
from Lewis Carroll's Through the Looking Glass. The Red Queen tells Alice, "Here you see, it takes all the running you can do to keep in the same place."
Okay.
In AMD's world, it means their competitive advantage, built on fast-moving tech, isn't static. It's not like a brand or a network that just sits there. It's constantly being eroded by competitors who are also running flat out, innovating like crazy.
So AMD has to innovate relentlessly just to maintain its position.
Precisely. They have to design faster chips, develop better architectures, build out their software. They have to run as fast as they can just to stay where they are relative to Nvidia and Intel. That massive R&D budget, a huge chunk of it isn't really for growth. It's maintenance capital expenditure just to keep the moat from crumbling.
Wow. So R&D is like repairs on the castle walls.
That's a great analogy. It's an exhausting race, but absolutely necessary. And the quality of the business, long-term, depends less on the existence of its IP today and more on the return that R&D engine can generate while sprinting.
That really puts the leadership challenge into perspective. Which brings us to Dr. Lisa Su. You often connect company strategy to broader ideas like surfing a wave or staying in a circle of competence. How does AMD, under her leadership, fit those models?
Both fit remarkably well, and they say a lot about the strategic quality there. Charlie Munger always talked about catching a huge wave and riding it, right? Not fighting the tide.
Yeah, surfing.
Dr. Su's leadership has been a masterclass in positioning AMD to surf this monster AI wave. AMD didn't create the wave, but she built the capabilities, the surfboard, if you will, the products, to be one of the very few companies able to ride it effectively at the highest level. Their whole strategy now, the R&D, the acquisitions, the roadmap, it's all about navigating and leveraging AI, seeing where the world is going and building the tool.
And the circle of competence, especially with big deals like Xilinx. Did they stray outside their lane?
No, and that's the key. Buffett emphasizes sticking to what you know, right? Your circle of competence. AMD, under Dr. Su, has shown real discipline here. They haven't done what Munger called diversification, buying unrelated businesses.
Right.
Instead, they focused intensely on deepening their expertise in high-performance computing. Xilinx and Pensando weren't departures. They were logical, synergistic expansions. FPGAs, DPUs. These strengthen their core data center offering. They added puzzle pieces that fit perfectly, enhancing existing strengths, not trying to solve a totally different puzzle. That's smart capital allocation.
Okay, let's shift gears slightly. Let's do a bit of scuttlebutt, get a feel for real-world perception. What do customers actually think? What about employees?
I'm really curious about the customer view first. Their CPUs, Ryzen and EPYC. Are they loved? Or is it more, just tolerated?
Generally speaking, for the CPUs, both Ryzen and EPYC, the sentiment is overwhelmingly positive. They're pretty much loved. From individual PC builders to the giant data centers, AMD's processors get high marks. Tech reviews consistently praise them, often for better performance than Intel, sometimes better power efficiency, often better value.
So strong product market fit there. Definitely. Customers see them as delivering innovation and value. That builds real loyalty and drives adoption, especially with those hyperscalers optimizing for performance per watt and total cost.
Okay, CPUs are loved.
Yeah.
What about GPUs? Radeon for gaming, same story or different?
It's a bit more nuanced on the GPU side. Specifically for PC gaming, Radeon GPUs are widely seen as great value. Especially in that big mid-range market segment, reviews often show them beating similarly priced Nvidia cards in traditional gaming.
So good bang for your buck.
Excellent bang for your buck. If you're an everyday gamer not chasing the absolute bleeding edge, Radeon is very appealing. Strong loyalty there. But at the very highest end and with newer tech like real-time ray tracing, Nvidia has historically held the performance crown.
Oh, okay.
So Radeon is maybe loved for the value, but sometimes tolerated on the bleeding edge by those wanting the absolute max performance and features. It's a tougher fight against Nvidia there than against Intel and CPUs.
That's a useful distinction. Now, what about inside the company? You mentioned some yellow flags from employees despite the positive official image. What's the story there?
Yeah, it's a bit complex and definitely something investors need to watch. Officially, AMD promotes a great culture. They talk a lot about diversity, belonging, and inclusion, employee groups, mentorship. They reported a 93% engagement survey response rate in 2024, which is high.
That felt good on paper.
Dr. Su talks about attracting talent with the mission, not just pay. All sounds positive. However, When you dig into anonymous employee reviews, Glassdoor, comparably, places like that, you see a recurring theme.
It is.
A very demanding, high-pressure environment, lots of comments about poor work-life balance, feeling expected to be on all the time, 7 days a week, mentions of burnout, long hours, even some pockets of toxic middle management.
That doesn't sound ideal for keeping top talent happy.
It's definitely a yellow flag. Remember, AMD's Moat is its R&D engine powered by its people. If the culture leads to high turnover or burns out key engineers, that could directly hurt their ability to innovate long-term. It could degrade the moat itself. It's not a red flag yet, maybe, but something to monitor closely.
Okay, so great talent, maybe working under intense pressure. That leads us to the battlefield itself. Who are the main adversaries? Who are they up against every day?
Yeah, they operate in what's basically a duopoly or triopoly in their key markets, and they face absolute titans. First, you have Nvidia, undisputed leader in discrete GPUs, the 800-pound gorilla in AI accelerators.
Right.
NVIDIA's play is that whole full-stack proprietary AI ecosystem. It's not just chips, it's the hardware, plus that CUDA software platform we talked about. That CUDA ecosystem is incredibly sticky, giving them a huge advantage.
Software mode again?
The software moat, deeply entrenched in academia, enterprise AI, very hard to displace.
And then there's the old rival, Intel. What's their situation now, especially after EPYC took so much server share?
Intel is still the historical leader in x86 CPUs. They're in the middle of this massive turnaround effort they call IDM 2.0, Integrated Device Manufacturing 2.0.
Trying to get their manufacturing mojo back.
Exactly. They want to regain leadership in process technology, not just for themselves, but also to become a major foundry, making chips for other companies, maybe even competitors someday. So Intel's fighting hard on both design and manufacturing fronts to claw back CPU share from AMD. It's an incredibly dynamic fight there. But amidst all that intense competition, AMD has this really unique, durable strategic advantage. Something neither NVIDIA nor Intel can easily copy, and it's critical. They are the only company with leadership IP, high-performance IP, in both x86 CPUs and high-end GPUs.
Okay. Intel has CPUs, but not top-tier GPUs for AI. NVIDIA has the GPUs, but no x86 CPUs. AMD has both.
Precisely. And that allows them to pursue this integrated platform-level strategy.
How does that work in practice? What's the advantage of having both?
Well, think about a big data center customer. AMD can offer an optimized package. EPYC CPUs working seamlessly with Instinct GPUs. It's not just selling two parts. It's engineering them to work together efficiently at the hardware and software level. That's a huge plus for hyperscalers building complex systems.
Easier integration, better overall performance, potentially.
Potentially, yes. And it means they can offer solutions for almost any workload in the data center general, computing with EPYC, specialized AI with Instinct.
And I guess the Xilinx and Pensando acquisitions slot right into that platform strategy, too.
Perfectly. The synergy is profound. Xilinx adds those FPGAs for specialized acceleration or edge tasks. Pensando adds DPUs to offload networking and security from the main CPUs, making the whole system more efficient.
So they're selling a complete solution, not just components.
Exactly. They're moving towards selling complete, optimized computing platforms. That's potentially much stickier for big enterprise and cloud customers looking for end-to-end answers, not just isolated parts. It's about solving the whole problem.
Okay, so this complex strategy, this transformation, what does it mean for the leadership and the company's financial health? Let's pivot to management and financials. Dr. Lisa Su is seen as this exceptional leader. What's her philosophy? What does her track record tell us?
Yeah, Dr. Su, CEO since 2014, is genuinely regarded as one of the best leaders in tech, period. Her philosophy comes through really clearly in everything she says and does. It's all about product leadership, relentless execution, and long-term strategic positioning. Engineering excellence, strategic vision, that comes first. Always looking years ahead.
And her track record certainly backs that up, doesn't it?
Yeah.
The turnaround was incredible.
The turnaround is the evidence. It's undeniable proof of a deep, long-term, owner-oriented mindset. When she took over, AMD was practically on life support. $2 billion market cap, drowning in debt, losing share. Many had written them off.
Yeah, they were in rush shape.
Through incredibly bold, technically sound decisions like that huge bet on the Zen architecture, she engineered one of the most stunning corporate comebacks imaginable. Now they're a nearly $300 billion leader going toe-to-toe with giants. That doesn't happen with short-term thinking. That's a true steward building enduring value over a decade. She thinks and acts like an owner.
That's compelling. Are the management incentives aligned? Do they have skin in the game alongside shareholders?
It looks exceptionally well aligned, which is critical. Looking at their proxy statements, executive pay is heavily weighted towards long-term equity. For Dr. Sue in 2024, something like 70% of her $31 million compensation was stock awards, not cash.
So their wealth is tied directly to the stock price appreciating over time.
Exactly. And the performance metrics for those awards are tied to things like multi-year revenue growth, profitability, total shareholder return versus peers. It incentivizes sustainable value creation, not just hitting quarterly numbers.
What about insider selling? Do executives dump stock?
Well, while their direct ownership might be a small fraction compared to big institutions, a huge chunk of their personal net worth is tied up in AMD stock, vested and unvested. When they do sell, looking at the filings, it's mostly through prearranged 10b5-1 plans.
Which are for planned diversification, right? Not panic selling.
Generally, yes. It allows for orderly diversification, tax planning, without signaling sudden pessimism. It looks structured and transparent.
Okay, management seems aligned and long-term focused. How about capital allocation? Where do they put the company's money? R&D, acquisitions, buybacks?
Their capital allocation has been, I'd say, rational and exceptionally disciplined. Morningstar gives them an exemplary rating, which isn't common. They have a very clear hierarchy for using cash.
What's top priority?
Top priority, no question, is reinvestment in the business. Primarily funding that massive R&D budget we keep talking about. It's the lifeblood, non-negotiable for them.
Makes sense given the Red Queen effect.
Totally. Second, they've done strategic M&A, but very judiciously. Xilinx and Pensando are prime examples. Not random buys, but highly focused moves to get critical tech that fit their platform strategy perfectly.
Okay, R&D, strategic M&A. What's next?
Third is balance sheet strength. They've managed debt prudently, paid down a chunk recently, $750 million in 2024, and built up a nice net cash position. That gives them resilience and flexibility.
And finally, shareholder returns, buybacks, dividends.
Finally, yes, returning excess capital via opportunistic share repurchases. They did $862 million in buybacks in 2024, have a big $4.7 billion authorization left. Crucially, no dividend right now.
Which is appropriate for a growth company still investing heavily.
Absolutely the right call. The whole framework just makes sense. Highest priority is strengthening the moat and fueling growth.
You mentioned they've built a real financial fortress now, especially compared to their past fragility. Can you expand on that? How consistent is their profitability?
Yeah, fragile was an understatement sometimes in their history, but the transformation is remarkable. Now it is a fortress. Consistent, expanding profits, high-quality earnings, pristine balance sheet.
Driven by that shift to higher margin products.
Largely, yes. Since Zen launched, profitability has steadily improved. Moving towards high-value EPYC and Instinct chips boosted gross and operating margins significantly. Fiscal 2024 saw a record non-GAAP gross margin of 53%, operating margin of 24%. That shows the power of the Fabless model's operating leverage. As revenue scales, more flows to the bottom line without proportional factory costs. Now, digging into the key financial ratios, it's mostly positive, but there's one metric that definitely warrants a closer look, maybe even raises a yellow flag.
Okay, let's start with return on invested capital, ROIC. That's always a big one for identifying truly wonderful companies. How does AMD look there?
Right. ROIC tells you how efficiently they turn capital into profit. Bang for the buck. And here's the tricky part for AMD. Before 2022, their ROIC was fantastic, way up there, 30%, even 50% in 2021.
Wow, really high.
But that massive all-stock Xilinx acquisition in 2022 dramatically increased the invested capital part of the calculation, the denominator. It's like buying a huge new factory or investment-based balloons instantly.
And it takes time for the earnings from that new asset to catch up.
Exactly. So the ROIC metric plummeted down to low single digits, like 3.25% in 2024. Now, this is partly an accounting effect of a huge deal, but the entire long-term bull case for AMD requires the belief that future earnings, especially from AI and data center, will drive that ROIC much higher again, back into the high teens, 20s ideally. Right now, that low single-digit ROIC, it's not typical of a wonderful company known for sustained high returns. It needs to improve significantly.
Okay, so ROIC is the main point of concern, at least currently. What about free cash flow conversion? How much actual cash are they generating from those profits?
On that front, they look incredibly strong. In 2024, they generated about $2.4 billion in free cash flow from $1.6 billion in GAAP net income. That's a conversion rate around 147%.
Over 100%.
That's great. It's excellent. It signals high-quality earnings, not just accounting profits. The cash is really flowing into the business, available for reinvestment, debt paydown, buybacks. Very healthy sign.
And lastly, balance sheet strength. Net debt to EBITDA. How resilient are they?
Exceptionally strong. A true fortress now. As of Q2 2025, they had $4.4 billion in cash, $3.2 billion in debt. That's a net cash position of $1.2 billion. More cash than debt.
So their net boat EBITDA is negative.
It is, meaning they could wipe out all debt with less than a year's EBITDA. That gives them immense resilience to weather downturns and, crucially, flexibility to keep investing aggressively through cycles. Huge advantage in this R&D heavy industry.
Okay, so we've got a transformed business, strong leadership, a widening but contested moat, and strengthening financials, apart from that current ROIC dip. Let's talk valuation. What's the market thinking? How is AMD priced?
Well, historically and right now, AMD trades like a premier growth stock, high multiples. Its PE-PS ratios are consistently way above market averages. That 5-year average PE was, what, 185?
Whoa, okay, so the market has very high expectations.
Extremely high.
Why? What's the bet investors are making to justify that premium?
It's absolutely a forward-looking bet. It's not based on current earnings. The market is pricing AMD on the expectation that they will successfully grab a significant chunk of that massive AI accelerator market. You know, the one they estimate could be $500 billion by 2028.
So the current price assumes years of future success, especially in AI.
Exactly. It assumes continued share gains from Intel in CPUs, but more importantly, significant gains against Nvidia in AI. It's discounting future flawless execution and huge market growth.
How does that valuation stack up against Nvidia and Intel themselves? Is AMD cheap or expensive relative to peers?
Comparing them puts it in context. AMD sits kind of in the middle. Trailing PE, AMD's around 48, Nvidia 55, Intel way higher at 90, but Intel's profits are shaky, distorting that.
Okay, what about price to sales?
PS is maybe more useful here. AMD's about 9, Nvidia a staggering 29. Intel's much lower at 2. So AMD's valuation is high, yes, but way less demanding than Nvidia's on sales, reflecting Nvidia's current AI dominance and higher margins.
Nvidia's margins are much better right now.
Oh, yeah. Nvidia's gross margins estimated around 75%, AMD 49%, operating margins 45% versus 7%. But AMD's profitability and ROIC, even with the dip, are vastly better than Intel's, which has negative operating margins. So AMD's in this interesting spot. Price for big growth, but maybe with some valuation cushion versus the AI leader, and financially way healthier than its old CPU rival. Which brings us to margin of safety for a stock like this. You know, traditional Graham-style safety buying way below book value or current earnings, that just doesn't apply here. You're probably never buying AMD at a low multiple like that unless something truly disastrous happens.
So if traditional value metrics don't offer safety, where do you find it for a growth company like AMD?
You look for it in 2 other places. First, qualitative margin of safety. That comes from owning a genuinely superior business, riding powerful secular tailwinds. We've argued AMD has many of those traits. Widening moat, great leadership, riding AI and cloud waves. That underlying business quality is your main defense.
Okay, the quality of the business itself. What's the second source?
Second is price dislocation. A chance to buy with a quantitative margin of safety might only come during a market panic, a big downturn hitting everything, or a company-specific setback that's temporary.
Like a missed quarter due to supply issues.
Right.
Or a short product delay.
Exactly. Something that spooks the market but doesn't cause permanent damage to the R&D engine, customer relationships, or management integrity. Those rare moments are when a great business might become temporarily cheap.
Buying when others are fearful, but only if the core business is intact. It always comes back to Buffett. Price is what you pay. Value is what you get. What's the implication for AMD at its current premium?
Buffett's wisdom is key. Even if AMD is a wonderful company, paying too much guarantees a poor return. The current premium basically prices in years of near-perfect execution and big AI market share gains. There's very little room for error baked into the price.
So even if they do well, but not spectacularly well, the stock could suffer.
Precisely. Imagine AI revenue grows to only $20 billion instead of, say, $40 billion. That's still amazing operational success. But the stock could get hammered by multiple compression as expectations reset lower. The price you pay is maybe the biggest determinant of your return, and for AMD, that hurdle is very high right now.
Okay, price is the hurdle. So looking ahead, what's the single biggest growth engine we need to watch? And conversely, what are the permanent impairment risks, the things that could truly break the business?
The single biggest growth engine, no question, is the data center segment, specifically the Instinct family of AI accelerators. The current MI300 series, the upcoming MI350, MI400, their success in getting designed into customer systems, adopted, and sold in volume is paramount.
That's what will drive revenue, margins, and hopefully that ROIC number.
Exactly. It's the linchpin of the whole bull thesis for the next 5–10 years.
And the flip side, what are the existential threats?
Yeah.
The things that could permanently wreck the company.
There are several real long-term risks. Number one is technological failure or misexecution. This industry is brutal. If MI350 or MI400 fail to compete effectively with NVIDIA's next chips or face major delays, AMD could lose credibility fast with those critical hyperscale customers.
They demand the absolute best.
Absolutely. A major slip-up could relegate AMD to a niche player in AI permanently. That would be catastrophic for the valuation. You don't get many second chances here.
That execution risk is huge. What about geopolitics, that reliance on TSMC in Taiwan?
That's the second major risk,
Yeah.
Geopolitical and manufacturing concentration. The Fabless model's strength is also its weakness. Almost total reliance on TSMC, mostly in Taiwan, a major geopolitical hotspot.
A conflict or blockade there would be disastrous.
It could halt their production of leading-edge chips. It's a severe risk, largely outside their control. Diversification efforts are underway, but it's a slow process. They're exposed in the medium term.
And third, back to NVIDIA's CUDA moat. Is that a permanent risk too?
It's a profound risk, maybe often underestimated. The entrenched CUDA software moat. There's a real chance that NVIDIA's software ecosystem is just too big a barrier to overcome, or much bigger than the market thinks. People focus on chip specs, teraflops, bandwidth.
The hardware comparison.
Right. But the second level view is that buying AI infrastructure is an ecosystem decision. All that developer experience, libraries, support built around CUDA for 15 years, that creates immense inertia, huge switching costs.
So AMD's challenge isn't just building a faster chip.
It's building an entire trusted software ecosystem to rival one with a 15-year head start. That could take way longer, cost more, and be less successful than hoped. It might cap their AI market share, even with great hardware. It's an ecosystem battle, and NVIDIA has a massive lead. But despite those big risks, there are definitely potential catalysts that could really unlock value for AMD in the next few years, things that could validate the bull case.
What's the biggest, most immediate catalyst we should watch for? The one that would justify the current price?
The most immediate and tangible one would be a successful ramp-up of MI350 and MI400, not just launching them, but seeing real proof of strong adoption by hyperscalers, significant market share gains through 2025, 2026. If those chips deliver and sell well, that's huge validation.
That would likely lead to earnings upgrades, boost the stock.
Exactly. It would confirm them as the credible number 2 in AI. The market's waiting for proof these next chips perform in the real world, in volume.
What about the software side? ROCm catching up to CUDA. Could a breakthrough there be a catalyst, even if it's longer term?
Oh, absolutely. A strategic software breakthrough for ROCm would be monumental, maybe even more impactful than just hardware wins. Imagine a major partnership or a technical leap that makes ROCm much easier to use, more capable.
Lowering those switching costs from CUDA.
Precisely. If ROCm gets near parity in developer tools, libraries, support, that unlocks a much bigger piece of the AI market currently stuck with NVIDIA because of software lock-in. It's a tough battle, but a software breakthrough would be transformative.
Okay, let's connect this all to the bigger picture, that second-level thinking. What might the market be missing or overemphasizing about AMD's position in AI?
Well, the market consensus now is pretty clear and pretty bullish for AMD. It sees the AI market as huge, growing fast, basically a duopoly between NVIDIA and AMD. The common view is there's plenty of room for both, and AMD is firmly established as a credible number 2.
And the stock price reflects the expectation they'll capture, what, 15–25% of that market over time?
Something like that, yeah. The stock is largely priced for that successful outcome. That's the consensus bull case.
So that's the common wisdom. What's the potential contrarian or second-level insight the market might be overlooking?
A deeper look suggests the market might be significantly underappreciating the durability of NVIDIA's software moat, that CUDA advantage we keep hitting on. As we said, consensus focuses a lot on comparing hardware specs.
Right, the teraflops war.
But the more nuanced view is that buying AI infrastructure is an ecosystem decision. That 15 years of CUDA development, the switching costs, they are immense. AMD's challenge isn't just building a faster chip, it's building that whole trusted software ecosystem.
And that might take longer, be harder, and maybe less successful than the market hopes.
That's the contrarian risk. It could mean AMD's ultimate market share gain is delayed and maybe capped at a lower level than consensus expects. It's like building a great engine versus building the entire highway system for it to run on. The highway system takes a lot longer.
So we've really covered a lot of ground on AMD, from that incredible business transformation and its competitive strengths to the really significant challenges it faces, especially in AI, and those high expectations baked into the valuation right now. It's definitely a dynamic story of ambition and innovation.
It absolutely is. And it leaves us and you, our listener, with a really important question to think about for the future. In this era of unprecedented technological leaps, where does the ultimate competitive advantage really lie? Is it primarily in building superior hardware? Or is it in creating that sticky, enduring power of a software ecosystem that captures the hearts and minds of developers, building that network effect? Where do you believe the greater leverage truly resides for companies like AMD in the decades ahead?